You didn't
Some
say.
of it's just about not the right fit, right? But some of it's totally about some principal stuff.
I can start. Sometimes it's just, the business is just totally wrong profile. So even though we're generalists, you still need to see a great growth story. We're still going for 10 times returns. And so, if we're not going to invest in a sandwich shop, we might invest in a food business if it's disintermediating the retailer and it's being distributed online. So, sometimes it's just the profile. Sometimes it's the people. You just get that kind of gut feel. It's the wrong fit. It may be a great pitch, maybe even a fantastic business potentially, but there's just not that relationship there. And if this is a partnership that's going to work, you have to have that relationship.
The only thing I haven't sat on that side of the table, but apart from small angel investments, but I guess I would say that the biggest thing we learned, and I should have put this on here, was that quite often it's not us, it's you type thing. So especially in tricky economic times, and this is certainly not the case with Octopus, but with some investors, you do need to ask them, where are you in your fund? Do you have any money to invest, and what sort of businesses are you investing in now? Because we got quite a long way down the line with a couple of investors that were quite late in their fund, or they were tapped out, they didn't have any much money to spend, or they're in the process of raising a fund and were being quite speculative. And they just weren't ready to invest, and certainly not in an early stage investment. And we got quite a long way down, and that can be really frustrating, because you spend an awful lot of time. And so ask those questions early on. It also demonstrates that you're kind of quite a bit more savvy, I guess.
And today, as we sit here, there are an extraordinary number of funds taking meetings who aren't investing.
Yeah, I agree.
Be aware of that. If you've got a really interesting business, then you'll get a meeting, because people always like to keep abreast of what's going on. Maybe that they've got portfolio companies that they want to get a bit of intel around what's going on in the market. So be very mindful with your time. I think, as was mentioned earlier, VC's time's sometimes the cheapest.
Just when I was a VC, one thing which always surprised me was how poor the initial contact often is. It's actually, most businesses are reasonably simple in concept. There might be loads of complexity around the technology or the way that's delivered, but if you kind of consider, any VC will receive a large number of deals each week or each day even. So really work on that first paragraph in the email, just to explain what you do really simply. And there's a lot of buzzwords used that are just assumed that everyone knows exactly what it is. In actual fact, if you're not solving an issue that's real and understandable quickly, you've got a much harder job. But sometimes that doesn't come across, and then sometimes you find out what the business does, 8 pages into the business plan, and frankly, if you ever get that far.
My business partner and I went to one meeting with the business angel, and the outcome was, we don't think that your business is right for our investors. We don't think we have the right person. But it was interesting to see, because we've just started this process, so I'm just throwing things out there. This is what the market needs. This is their own thing. So just trying to see how they react. So it was quite good for me to be there with him. So I wasn't doing it on my own to try to get some funding or anything. He could say, well, you said this, there was a perk, when you said this, the conversation went on, and it was hard for me to judge. So it was quite good to do that. That was quite interesting feedback from just that person watching you, rather than you just trying to interact all the time.
You'll need to do a lot of meetings, that's for sure. You need to meet a lot of people. It's painful.
Question from the gentleman at the back. Yes, yes.
What kind of animals makes a good team as opposed to a bad team? Are there things that you're specifically looking for, like, well, you need at least a CFO, CM, or whatever? What are the components of the team that make a good team or a bad team?
Yeah, in terms of, that's quite a difficult question to answer. I think if you look at the diversity, everyone says we've got great teams. If you look at some of our teams, we thought were great and they aren't, so we get it wrong. What makes a great team? Typically, if you can find a bunch of guys that have done it before, that's a good start. If you can find guys that have the answers. Oftentimes when you sit in that first meeting and you ask questions, people that have the answers and, you know, have more than the answers tend to have thought a lot more about the business. And, you know, that tends to be an indicator, especially if it's a CEO, that he's probably thought about the people he's hired as well. And you know, those teams tend to be ones with a strong CEO who's demonstrably excellent, who can execute, who's shown a track record of execution, tend to be decent teams because they tend to hire good people around them. In terms of kind of you know, what does the makeup need to be? You know, do you always need a CFO? No, especially in the early stage. Typically, you've got no financials to manage, so you know they end up being a cost base more than anything else. I like to see strong sales. I like to see strong leadership. And in a tech business, you want to see a strong technology head. And I think if you have those three pillars, and those three pillars interact effectively, in as much as you have someone with a vision, somebody who can build it, and somebody that can rein the builder in so that he builds what the customers want, you know, it's those three pieces that you typically see as successful.
I think as a VC as well, what looks like a good team, and you put the money in sometimes 6 months later, you think, "Oh, wish we hadn't made that decision." And that's when the fun starts, I think. But,
What's worse is when you have the gut feel that, you know, just before you put the money in, that maybe this guy wasn't exactly what you thought, and then you put the money in anyway, and then you realise that that gut feel was right. And then you kick yourself for the next 2 years as you try and either move him out or put people around him, or, you know, it's painful.
and you have your manager kicking you as well for making that decision in the first place. Yeah. Anyway, any more questions? Just to finish off then, so some entrepreneurs out there, what advice would you give these guys? What 3 things to remember as they leave here tonight? Each of you, would you give advice? Start with you, Alistair.
Okay, it's present on my mind right now. I just one, I think, which is trust. We mentioned gut instinct. I think trust your gut very strongly. So just trust. I think a lot of the things we're doing in the business now, which are working very well for us, we knew 3 years ago, and we went down a slightly different path because that's what the market was doing at the time. That's where the trend was. And yes, it helped us raise some money, but it's actually what we need to be true. So who we compete with, the type of product we are, the type of people we sell to. And I swore to myself when we started the business that I would always listen to my gut, having learned from the first 2 where I was right, and I thought, God, I was just right, and I was too young, I didn't trust myself, I didn't have enough confidence. And bugger it, it's done it again. So yeah, I think definitely trust your instincts and go with it. Have confidence in your beliefs. That's all you've got really when you're very early stage.
Jamie?
I suppose early stage companies, to my mind, are often full of risk. You know, there's lots of uncertainties and lots of things which aren't necessarily controllable when you go out to, whether it's speaking to an investor or finding new customers or whatever. And so I've always put a lot of store in the amount of preparation and the clarity that goes into it. Again, it's a little bit like that first approach to the VC, but it's about really making sure that you understand your business. Yeah, so there's no point in getting, for instance, a corporate finance advisor in order to build your financial model. You, as the CEO and not just the FD, need to understand how your business works in the long run, so that when you get asked those questions in meetings, or more importantly, when you actually have to make the decisions when you're actually running the business, you really understand it. And it's amazing how many small companies actually have a relatively superficial idea as to how their business works on a route-to-market basis, or on a margin basis, or in a financial basis. Even when your company's not selling anything, you need to have some idea as to how to put that together financially so that it makes sense for the investors.
And Luke, just to finish up.
I would take heed of everything that's in Alastair's presentation, because it's pretty much, you know, the most clarity you'll get in this space, and everything he says, I think, is pretty accurate. So, you know, if you want to start somewhere for understanding how this industry operates, and, you know, how to get funding, that's a great place to start. You know, outside of that, when you're selecting investors, choose wisely, and, you know, be smart about the money. It's not just cash that you're looking for. You know, cash is great, but in the long term, you want somebody that can, you know, grow with you, grow with the business, or can bring in people to grow with you. What you don't want to find yourself on the end of is a situation where you've taken money from, you know, an investor who then can't follow their money, or doesn't want to follow their money for whatever reason. And when they try and, you know, when you then go out to other investors that's almost, you know, an immediate black mark against you. Why aren't your current investors following? You know, what's wrong with you guys? What have you done wrong? Even if there's perfectly good reasons, trying to communicate those to the next set of investors is very, very challenging. So, you know, if you've got a number of offers on the table, you should bear that in mind. You know, don't always just take the cheapest money. Sometimes, you know, take the smart money. Always take the smart.